How Bitcoin is getting more value after the US presidential election. Bitcoin's value can be influenced by many factors, including macroeconomic conditions, policy decisions, and investor sentiment, all of which may shift after a US presidential election. Here are the main ways the 2024 US election results could impact Bitcoin's value and lead to changes in the cryptocurrency market. 1. Policy and regulatory uncertainty. One of the biggest influences of a presidential election on Bitcoin's value is the potential for regulatory changes. Each administration has different views on cryptocurrency, so shifts in leadership can mean either support or restrictions. If the new administration takes a more crypto-friendly approach, it could lead to increased adoption and institutional support, thereby pushing Bitcoin's value higher. On the other hand, if the new government is more cautious or even adversarial toward digital assets, investors might expect tougher regulations, which could lead to short-term volatility or suppression in price. Historically, administrations that prioritize financial innovation and emerging technology have been viewed positively by the crypto community. Policies aimed at regulating decentralized finance DeFi and exchanges while providing clear guidelines may actually help Bitcoin's value by creating an environment where larger institutional players feel safer entering the market. Moreover, the demand for Bitcoin might increase if investors view it as a way to hedge against the risks associated with regulatory changes. 2. Economic conditions and fiscal policy. A post-election shift in economic policy can have significant effects on Bitcoin's value. For instance, if the new administration opts for a more expansionary fiscal policy, which could include increased government spending or tax cuts, this might lead to inflation. Investors often view Bitcoin as a hedge against inflation because of its finite supply, so inflationary pressures could drive more people toward Bitcoin. When government spending rises, it can result in an increase in the national debt, which might raise concerns about the long-term stability of the US dollar. As the dollar weakens or inflation rises, Bitcoin can emerge as an attractive store of value. Investors worried about currency devaluation may turn to Bitcoin to preserve purchasing power, thereby increasing demand and driving up the price. 3. Monetary policy and interest rates. The Federal Reserve Fed plays a significant role in shaping Bitcoin's value, especially in times of changing interest rates. While the Fed operates independently, its policies can be influenced indirectly by economic and fiscal policies set by the administration. If the election leads to policies that encourage the Fed to keep interest rates low to stimulate economic growth, it may benefit Bitcoin. Lower interest rates make traditional investments like bonds less attractive, leading investors to seek alternative assets, including Bitcoin. Conversely, if the administration pushes for higher interest rates to curb inflation, this can lead to a decrease in Bitcoin's price. Higher rates strengthen the dollar and make traditional assets like bonds and savings accounts more attractive, potentially decreasing demand for Bitcoin as investors return to conventional investments. For a market sentiment and investor confidence, the election result can also shape investor sentiment. If the new leadership promotes stability and is proactive about economic growth, it can boost market confidence, leading to increased investments across all asset classes, including Bitcoin. On the contrary, if the election results in political uncertainty or polarizing policies, it could lead to market volatility, which often drives investors toward assets that are seen as safe havens, like gold and Bitcoin. For instance, if the election results in prolonged disputes, or if policies face significant public resistance, it could lead to uncertainty that makes Bitcoin, often viewed as a decentralized alternative to traditional markets, more attractive. 5. Institutional adoption and legal clarity. A favorable regulatory environment could accelerate institutional adoption. In recent years, corporations, pension funds, and institutional investors have started to add Bitcoin to their portfolios as a hedge against economic volatility. If the new administration takes a positive stance on cryptocurrencies, it could encourage more institutions to enter the Bitcoin market, thereby increasing its value. Positive policy changes could also lead to new financial products, such as a US-approved Bitcoin exchange-traded fund ETF, which would give more investors access to Bitcoin. Institutional investors tend to bring a higher level of credibility and stability to the market, which can reduce Bitcoin's notorious volatility and help it gain long-term value. Additionally, Legal clarity on tax treatment and reporting standards could encourage more traditional investors to view Bitcoin as a viable asset class. 6. Public perception of privacy and decentralization. Bitcoin's decentralized nature and relative anonymity are appealing to people who value privacy. If the administration introduces policies that increase surveillance or impose strict controls on traditional financial systems, it could drive people toward decentralized options like Bitcoin. The desire to maintain financial privacy might lead people to prefer Bitcoin over assets that are more easily monitored. Moreover, if policies make it harder for people to freely use their financial resources, Bitcoin's decentralized properties can become more appealing. For instance, regions with capital controls often see Bitcoin adoption as a way for residents to bypass government restrictions on wealth. 7. Geopolitical concerns and global demand for Bitcoin. U.S. elections also have a ripple effect on the global stage. If the new administration adopts a more isolationist or protectionist stance, it could disrupt international markets, creating demand for safe haven assets like Bitcoin. Similarly, if the election leads to heightened tensions between the U.S. and other countries, investors worldwide may see Bitcoin as a global hedge. In some cases, international demand could rise if people in other countries see Bitcoin as a way to protect themselves from currency devaluation in uncertain times. For example, after previous elections, certain geopolitical tensions or economic downturns in various regions led to a higher global demand for Bitcoin, contributing to its appreciation. 8. Rising popularity of decentralized finance. DeFi. A new administration that favors technological innovation might take a supportive stance toward DeFi, an emerging financial ecosystem that operates on blockchain technology. This could indirectly benefit Bitcoin, as interest in DeFi usually correlates with increased interest in cryptocurrency overall. With more people using blockchain-based financial services, Bitcoin's credibility and utility in the digital finance world could rise, contributing to its long-term value growth. Conclusion: the 2024 U.S. presidential election has brought attention to Bitcoin for its potential as a safe haven asset, a hedge against inflation, and an alternative financial tool. The market is keenly watching how the new administration's policies on fiscal spending, regulatory oversight, and technological innovation might impact Bitcoin's trajectory. Investor sentiment, regulatory shifts, and macroeconomic trends will all play a role in shaping Bitcoin's value in the post-election environment. The dynamics created by the election could increase Bitcoin's adoption rate, leading to significant changes